Hello, 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 everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. Still scheduled to be on today. We'll see when he shows up. How is everyone doing today? Hey, Tesla Force, Michael Jones, a crude power rocket. Well, crude was up big today. Crude up 10%. That's a big move in crude. Hello, hello, Wavy. Nice sell off today. Yeah, I really like this price action today because it's setting us up for a deciding point. So this was nice. We had the end of month rally, then the dip in the first day. So now we get to see where we are going next. By the way, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Long-term viewers definitely do like that video, especially since Bob will be on today. And leave some comments, especially since Bob will be on today. So without further ado, let me unlock everything. So, I got to keep stuff locked down just in case. We got the riffraff in the house. Look at that. And the riffraff is in the house. Hold on. I got to make some adjustments still. There we go. In the corner.
Nobody puts baby in a corner.
What was that?
Nobody puts baby in a corner.
No one puts baby in a corner. That's right. Okay, Mr. Dirty Dancing Throwback. So, markets pulled back today. Notes continued their rally. Crude was up big. Gold was up big. Silver was up huge. What are your thoughts, Bob?
Well, I love looking at this chart because, again, people get all excited. Let me rephrase that. When we have situations like this, my phone blows up. It happened again today. I've got some money on the sideline. How far do you think this will go? When do you think the low will be in? Look at the rally moving right up to the 8, right up to the rotation zone, and then turning back. Right, it's only one day. It's not like we've collapsed again. Compare it again to that chart that we were looking at about a week or so back. And how many times, I think it was 5 different times, we had rallies during the 1999 to 2002 bear market. There was a 78% collapse in the Nasdaq. We had 5 rallies over 10%, 2 of them over 40%. I'm coming up on 30 years of doing this, and I bought the low 4 times in that 30 years.
To the tick or the low day?
The low to the tick, but then, it fell lower again. I mean, I'm talking about on a trade.
On a trade, you bought the low 4 times.
4 times.
The temporary low.
4 times in 28 years that I've been able to buy a swing low, a particular swing low. So I would say an example would be that low you have right there of those last 4 bars, right? Bought that low and then watched it go up and probably exited as we got to the rotation zone, right? Point being is that trying to figure out when this is going to bottom and turn around is impossible. What you do is you notice bottoming patterns and you get confirmation of bottoming patterns and you get news that might drive something up above and reestablish a medium to long-term uptrend. And that's really when you get involved. So my opinion of this is we're in bear market types of markets. We haven't technically entered a bear market. A bear market has a definition, and that's an extended period of below 20% from a recent high. We hit bear market territory for the Nasdaq. We hit it, but then we came out of it. But this type of price behavior is very common in bear markets where you have these rallies and then there's an event that somehow triggers us back into another new low. That's what I think about this price activity. The war in the Ukraine is just the most recent thing to, again, encourage this kind of behavior. When you look at some of like PMI data, the US, the EU, China, all turning lower. When you start looking at some of the economic data that's coming down the pipe, with the Fed being so focused on inflation, I don't think this war is going to slow the Fed down at all. I was never a believer in 50 basis points in March. They've now priced 50 basis points basically out of the market with the CME Fed Watch tool. What is it, 90-some% now for 25?
Yeah. This was actually up to like 8% earlier today. It's dropped back down to 1.2%, but I don't see him not taking any action. I mean, that would
No, they're going to do 25 basis points. Whenever it's and thanks for all the welcome messages, by the way. Whenever it's 95% or higher, that generally it happens. I haven't watched this tool for a long time because the Fed hasn't been moving. But when you go back to this Fed Watch tool and you see it at like 95, 96, 97%, that's generally what happens. And I've always been in the camp that they're not going to do 50 in March. They're going to do 25. The war's kind of gotten everybody else priced out of the 50. They're going to do 25. They're focused on inflation. There's no slowing of inflation now just because there's a war in the Ukraine. It's not. We've gotten a little bit of easing of the supply chain. The supply chain is doing a little bit better. If you look at the ISM data that came out this morning, the price index component is a little lower, came in a little bit lower than expected. But as I've said before, what is success in inflation? We've got 7% consumer price increase. What's success to the Fed? 4? I mean, the lowering of the price component on ISM a little bit or a couple of other pieces of data is not enough. So I think we're entering a bear market. I don't know how long it's going to last. I don't know how long it's going to go, and I don't know when the bottom's coming. But I think we're entering a bear market. I don't think these are simply prolonged corrections. I could be wrong. The Fed could completely come out and say, we don't care about inflation. In which case, I would be happy to continue to own gold.
Okay, well, since you don't know when the bottom's going to end, we don't need Bob on the show anymore. He's useless.
No, I have no idea when it's going to go.
So it's back to Mike. Help Mike smash the like. Exactly. I don't need to go through the comments of welcome back, Bob, because I'm kicking him off. The man, the myth, the legend, Bob. Look at all this. Now the party's started. I don't get these comments when Bob's not here. Hello there. Really curious what you have to share, say this week, discuss this week. Yeah, me too. Let's see what else. Some people are now saying instead of 6+ hikes, they will do only 1 or 2 now. How many rate hikes do you think are coming this year? I think 3 at least. Is that a 3 or a 0?
3. Sorry, this is the trading floor 3.
Yeah, I was going to say you.
Everybody else does this.
When you do
trading floor 3 is this.
Look, I could do this too.
Yeah, and then this is the trading floor 8.
So there we go.
3.
You see 3. Well,
I see 3.
Wavy says 3 at least. Let's see what else do we have. $25 super chat. Great to hear Bob's input, and thanks for both of you for your daily dedication to analysis, Mike. You both bring tremendous value to everyone in this community. You do, Mike. You're great. I was just joking, by the way, guys. So ISM, came in slightly higher than forecast. The PMI final came in slightly lower. So we have that. I also put up this from earlier, Bob. Did you see the Atlanta Fed forecast today? GDP is 0. It was slightly dipped below 0, but it's 0. So
this is kind of my point about stocks, right? So I think the Fed is, and I've said this before on these live streams, the Fed's tightening into weakness. They missed their opportunity to tighten into strength. And, the Russia-Ukraine situation, yeah, sure, it's going to slow things down, but just look at what it's doing to commodity prices. It's not going to slow inflation down. So, but it's going to slow the economy down. So now we've got stagflation, and that's why I think the Fed is in an absolute panic to try and get inflation under control now, because they realize now that they're going to be tightening into slowing. So they're not going to want to shock the markets with 50, but they're going to want to do 25, 25, 25, and they're probably going to go into quantitative tightening, is my guess. Not this meeting, but maybe the next one. If you don't know the difference between quantitative easing ending and going into quantitative tightening, ending quantitative easing is just not buying assets anymore. And then any of the assets the Fed has on their balance sheet, when they expire, they're just going to let them expire. They're not going to reinvest the proceeds, which is what they've been doing for the last, well, how many years has it been, Mike? 2000, since 2008?
What? It's quantitative easing?
Yeah. It's like a decade, right?
Yeah,
I mean, there was a
it's
little bit
over a
pullback.
decade. I mean, they started end of 8, early 9. And
Yeah. So quantitative tightening would mean they would start selling some of those assets. That would be quantitative tightening.
Yeah, it's taking action instead of no action and just letting things roll off the books.
13 years, according to I'm Not Dave.
I'm Not Dave. Well, see, we have wonderful people in here, like Genomic Stop, $10 super chat. How many rate hikes do I see? I'm still focused on about 4. But it could tip either way. I think inflation is going to continue to run hot because, I mean, look at, even if crude backs up, look at this crude. That's a massive move today. Now, even if this backs off, you're retracing. I mean, we're retracing a very high, a big run up. So even if it pauses or backs off, then it's still going to be relatively high. Oil is not going back. Sorry, I have my office door open because my wife's in Arizona now, and I have to deal with the 5 dogs. But that's why you might hear a little more noise. But if this backs off, oil's not going back to $60 anytime soon.
Right.
Gold. I mean, we look at the grains. Have you been watching the grains? I mean, wheat.
Yeah.
And the wheat's up big because of what's going on in Russia's a huge exporter of wheat. But look at this. I mean, this is just a monster move, and it was already high. We already a pretty big run up. Backed off into December, but even in November we had a decent run up. Back off into December. Then now it's going through the roof. Soybeans moving back up strongly out of the rotation zone. Corn also. Bob, I was reading that there was like 40% of fertilizer imports comes from Russia.
Yeah.
And fertilizer was already gone through the roof. Fertilizer was already through the roof before Ukraine. And
it's interesting. Like I sent a bunch of my family members out to fill up their tanks today as I was watching oil. And my wife ran out to fill up the tanks on one of our cars. And she texted me that one of the places she called and they said, oh, we just raised by 9 cents. So you think about that kind of behavior, right? When people see prices going up, they stockpile a little bit. One of the worst things that happens with inflation, and you can relate this to stagflation as well, is it feeds on itself as people just start to hurry up and buy stuff and stockpile things, and then it just drops off, right? With food inflation, to a certain degree, there's the old saying, when steak goes higher, people buy chicken. But you might just went through soybeans, corn, wheat, fertilizer for all of the above. We already know about poultry and beef and the price rises that we've had there. There's no escaping the kind of inflation we have right now. And now we've got an energy shock. I was on Yahoo today talking about, if any of you want to see it, I put it up on my Twitter, which is Bob_Iacchino. I was on Yahoo talking about crude oil, and crude oil is interesting. The soft commodities are different. There's a lot of hedging and speculation that goes on in crude oil. There's not as much speculation that goes on in ags. It's there. But crude oil can be, especially front month crude oil, can be a very speculative market. When I was looking at some of the open interest in last week, I was looking at open interest in the options. There was all kinds of open interest in $100 and $105, $110 calls in crude oil, and it was growing, right? That's hedging and to a certain degree speculating. But then when you see moves like this, a lot of this is overdone. What I don't want to do is predict when the overdone stops. What I will tell you is that when the speculation stops and when it slows down, and we actually saw crude oil get stronger after the IEA announced that the 31 member countries were going to get together and release 60 million barrels. 60 million barrels that they're going to release is 31 days of 2 million barrels a day, basically, right? 30 days of 2 million barrels a day. It's about 5 or 6 days of Russian production, right? Somewhere in that range. It's not a lot. And when it happened, crude oil actually rallied about $2 when the announcement came out, because speculators and hedgers alike start thinking, oh shit, if they're going to do something like this, what do they know that we don't know? What else is about to happen? And I mean, I've been in those conversations. I've been in trading rooms specifically when I worked at Tethys Oil, when things like that would happen, they'd go, well, they know something we don't know, so let's start hedging up, right? So a lot of this is excess, this move today, but it could go on for 3 or 4 days before it calms down. And when it calms down, it's going to calm down into the mid-90s. It's not going to come down into the 70s.
Yeah, but if just from the technical perspective, the prior resistances, which was just broken, was 95 area. So that's support.
Yeah.
So just going, back of the envelope, could it settle back down to after this? We could settle back down to 95, but that's not cheap oil.
No, not at all.
That's not cheap going into summer driving season. And just like, here's what I'm worried about. We have ags going through the roof right now, and there's no weather shocks yet. There's no issues with planting or drought issue. If it's an overly wet spring or an overly dry spring or summer, we don't have any, because you can't price that in yet because it's weather. But it's already, commodities are like, the ags are already overheated. And ags, even, you'll see it in the grocery store eventually, and vegetables were the last thing to really, they haven't moved that much, because who wants to just eat broccoli every day? But but when you think about ags, I mean, you have ags also go in, and chicken and beef you brought up, but ags go in to feed those. So they keep going up, and that has a ripple effect even into beef and chicken, which is already up tremendously.
Right. So there's no escaping this. It hurts people, and those people then need to cut back on buying, which hurts stocks. I mean, that's part of the reason I think we're basically in the start of a bear market, is there's too many things. There's just too many things. Now, we could be wrong. The Fed could just go, you know what? We're opening the spigots back up. Everything's going to be fine. We don't care about inflation. But that's a much worse scenario, I think.
Let's see. Do you think the Fed will announce when they plan to begin quantitative tightening?
Not in March. No, I think they're just going to announce, I don't know this for a fact, I think they're just going to announce the end of QE, when that date is. And they're going to say, we're going to let our balance sheet shrink naturally. They don't want to shock the market, but I really do believe every single meeting is going to be something. Every single one. Another guy talking about air fryers. All right, go ahead.
Where are you going with air? Kim Jong-un wants to join the party. 2 oil's going to 150. That what Rich thinks.
They could.
Well, you have other people who are losing the spotlight now to Putin. They've got to do something to keep up their end of the crazy leader regime. What did you say on Discord today? Aside from energy commodities, bullishness in the markets is a disconnect from reality. I just think people are still trying to justify their buy the dip. It's still again, there was no fear. We've had these pullbacks and there's been no fear yet. There's been all right, there's been minor, tension, I'll call it, but nothing fear. There's been no fear. And you can even see that with the VIX. I mean, the VIX, yeah, it's elevated, but it's not this.
Right.
It's not, I mean,
what is that? Is that the pandemic?
This was the pandemic. This was March. And this was leading up, and we got up to 80s. But even if you look at other spikes, this is in the mid 40s, 41. We had a little spike earlier, but we're still, this is still not going crazy. It's still trying to backfill. I'm really looking for the time when we start getting some real momentum instead of the chop. Now, I'm not going to argue it is elevated, but it's not. There's no fear in the streets yet. There's no people. I generally get, everybody I'm talking to is still buy the dip. Is this again? I think you got it too. I get the call. Should I buy more here? We're down for 2 days. Should I buy more? And I'm like, well, I'm liquidating more of my stuff, and I'm going to cash and short-term trading instruments. And they're like,
Right.
why? Because I'm like, I got major sell signals hitting. I would one that didn't hit since 2008 just hit, which
Yeah.
I'd rather, huh?
One of my friends slash clients, he said, well, my business is still strong. Like, well, I'm just showing you what's going on with the PMIs. Okay. Your business could be strong this month, but it doesn't mean that stocks are going to continue to go up. It doesn't mean that at all.
And businesses, even if we hit a recession, there's some businesses that are fine, but
Sure.
it's the overall macro pattern. So let's see. Christoph, I can tell you carryouts in the U.S. were already impossibly tight for this and next year before Ukraine war hit. Oh, and see, there was I didn't see this comment before. Broccoli in the air fryer is a game changer. Well, there's your cooking tip of the day. I actually do like
so
that.
many people go on about air fryers, and I'm just like, I don't know, man. They're big. Where am I going to put it?
No, they're not big.
They're huge.
They are not.
They're
They've
massive.
Countertop ones.
Size of like a microwave.
They are not. What are you looking at?
Well, I'm trying to eat stuff. Like, what am I going to have? 2 pieces of broccoli?
But, no, how much broccoli can one man eat in one sitting?
A head of broccoli. And then I got my wife's got to eat something.
So you're eating the whole broccoli and leaving her to scraps. I see how this works.
I mean, if it's a game changer in the air fryer, yeah, I'm eating the whole thing.
Well, I even have something better than broccoli in the air fryers. Broccoli in the Brava countertop oven, which cooks with light.
I don't know why I knew you got one of those, but I knew you got one of those.
And it is amazing.
You just put stuff in and it cooks it.
Well, there's recipes for everything, but yeah, you just put it in and it uses light to cook. It literally uses light. It's fantastic. Look up Brava, Brava, if anybody's interested. Again,
next thing you people are going to be buying jarred Italian sauce. I can't talk to you about this.
Jarred Italian sauce? Yeah. They have other kind of sauce that doesn't come in the jar?
I'm about to leave this chat.
So there's our little side conversation. It reminds me of little podcast days where we get sidetracked with a conversation. China's releasing stocks, but only rotation, which means they sell and release now, but buy back at the same time to recover the stock in the second half of the year. That's tough.
Yeah, China's one of the 31 nations in the IEA, and the U.S. does that as well too. Usually, when they release stocks from the SPR, it's part of a planned release. They're just accelerating it. This IEA release is not that. It's an extra release. It's only been done 3 other times in history: 1974, I think 2005, and 2011. So this is different than that. And I'm not saying that Chris is wrong. I'm saying that the IEA concerted release is in addition to scheduled releases. But it didn't matter. It didn't matter for price, as you could see on the chart you just had up.
Yep. Bond vol now highest since 2010. I haven't seen a limit down since March 2020. When we start seeing mass margin calls, there won't be a bid for some of these assets. There will at some price.
Right.
But, it could get interesting since everybody knows all still fully invested, fully margined up. Because they're like, where else can I put my money? There's no savings account still. You can't. What am I going to earn? 0 or like 0.0 whatever percent? So everybody's all in the market.
One of my buddies who has a stock hedge fund, he goes, yeah, we're really getting bearish. I said, what percentage are you long now? He's like 90%. So you're right. We haven't seen the capitulation, the fear sell-off yet.
No, when somebody says, well, I'm really getting bearish, I say, what position are you long? And they say 0, and I'm short on top of it. That's when you start. That's when it's tipping. I don't see that yet either. I get it. Every day it's like, what should I buy more today? Should I buy? We're pulling back. Yep. Should I buy? Fed hike rates by 25% every meeting until November. That's what Rich thinks. End the year 1.5 to 1.75. Do you think they can get that high, Bob?
Yeah, I do. It's just, predicting out that high, I'm not prepared to do that with a war going on. That's kind of why I'm at 3. Let's reassess after 2 happens and see what the commentary around quantitative easing and potentially quantitative tightening is.
What are your thoughts on the whole Ukraine thing? Do you think it's going to wrap up
I
anytime
need
soon?
I need Walter Cronkite. I don't know. So
Yeah,
I know a guy in the Ukraine, and he of course sends me this stuff. He's now in Poland, and he's trying to get his team into Poland. He's got about 10. He's got about 70 employees in the Ukraine, and his 10 of his team is now in Poland. Some are on the outskirts of Kiev. He's got about 10 people left in Kiev. I'm sorry, Kiev. And I'm just not. I don't know. He's like, oh yeah, they're killing people left and right. It's horrible. But then, there's other people. I know a friend of mine here who's Macedonian, whose relatives are Ukrainian. He said, well, Ukraine is the money laundering capital of the world. So, of course, all these countries that want to save Ukraine, he's like, I'm not saying Russia's right to invade it. He goes, but they're not choir boys in Ukraine either. He said, that's why, Bitcoin is the people who are involved in crypto want to help Ukraine because Ukraine's the money laundering capital of the world. I don't know what of any of these things are true. I really don't. So I don't feel qualified to take a moral stance on it.
no, I wasn't
At
asking
the end of
moral
the
stance.
day, I don't want to see one country invade another. I don't.
No,
Period.
that's again, I don't either. Do you think it's going to go on a long time, or just wrap up and then everything's going to shift back to Fed watch again in March?
So here's my stance on that. That I have an opinion on. If Putin is truly, so there's been some speculation that Putin's faculties aren't all there. There's been some people in the know on both sides, the left and the right, who have said it seems like we're dealing with a different Putin, right? In terms of, I don't want to say his cognitive ability, but in the way that he's treating this particular situation, doesn't seem like the same guy. If that's true, no, it ain't gonna end soon. Because you can't find Putin's money. Do you know who Anne-Marie Hordern is, Mike?
No.
Okay, so she's a Bloomberg politics reporter. She's a very smart person. She interviewed me in the past, and I used to communicate with her a lot when I would be on interviews. I communicated with her recently. It was a public conversation on Twitter, and she said she's tried to investigate Putin's money, and it's a complete dead end. Like, you can't find Putin's money. And he's known to be one of the richest people in the world. So, does Putin care if Russian citizens suffer? I don't really think he does. So, if he doesn't have all his faculties, or he's just that angry that he seems different to other people that have dealt with him in the past, then there is no telling when this ends. If he does have some sort of end game and he wants to get out of this, he's going to end it soon. Right? Like, if this is strategic and he still has his faculties, then it's probably got another week to 10 days, maybe something like that. I mean, that's complete made up speculation in my head. But the thing is, I can't trust media sources anymore. Certainly can't trust Twitter. Right? So I don't know what's true.
I get all my news from Twitter.
So do I, really, but I just don't know what's true. I got to call Joe Rogan and ask him. I don't know.
Well, here, I mean, I saw this that Rich put up too. Putin moves family members to Siberian underground city designed to survive nuclear war. I saw that roll across earlier, and again, that's not verified. So, but it is interesting.
Yeah, see, that's super interesting to me, Rich, because like, I don't know who that Russian professor is. I don't. Not saying what he's saying is not true. I'm just saying I have no damn idea. Right? I mean, just the fact that he announced that he put the nuclear defense forces, that actually sounds like strategic Putin, right? The kind of thing he would say to freak the world out. But man, if he's serious, are you effing kidding me? Like, this is going to be nuclear? I don't know. I mean, I just don't know what to believe.
Yep, and the problem is you get, this is why it's not only did you have the markets tipping over before this, now you get the moment to moment headlines, sometimes completely contradicting each other, within a few minute period, and you have the algo trades just kick off that are reading the headlines, and there's like buy, sell, blah 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 blah. And
there's a couple of longer term themes with this, because of the way that the Western allies have handled it. Which, again, I'm not smart enough to criticize that or compliment it. Right? It certainly gives a case for Bitcoin. And it certainly gives a case for holding gold. It gives a very strong case for both of those things, especially for emerging markets who, if they theoretically piss off the West, can be frozen out. Right? That's one of the things about these sanctions, especially the freezing out of the Russian central bank. I mean, imagine if you're a non-friendly emerging market, an emerging market that's not necessarily the U.S.'s best friend or the best friend of the West. Think of like a Venezuela, an Iran, potentially some of the other, I'm going to call them rogue nations for lack of a better phrase. Certainly gives an argument for Bitcoin, and especially gold in my mind. I still have a longer conspiracy theories. I think transactions in Bitcoin are probably going to be outlawed sometime in the next 18 months, possibly 2 years. But it's a little bit of an Alex Jones conspiracy type theory that I have. So I'm not really willing to go into it. But if you just look at what Trudeau did with the truckers and what the U.S. is now doing, I shouldn't say the U.S., what the Western allies are doing to freeze out Russia, and you can make a case that very few emerging markets would want to have a lot of U.S. assets. And what does that mean once the flight to safety is over for treasury yields? It means much higher yields.
Let's see. For those numbers, crude, what is that? A 6.1 million draw, gasoline, a 2.5 million draw. On
API?
Huh?
Is that API? It looks like API.
Yeah, it looks like it. Is that what you got, Wavy? Hard to find cash and gold that doesn't want to be found. Very true statement. The military conflict might end soon if Russia succeeds, but the escalation between Russia and the West just started. Everybody in Europe feels the world just shifted.
Yeah, I agree with that. Again, I think if Putin is saying the military conflict will end soon, but again, that doesn't help as investors, that doesn't help us. But if he's not saying, it's likely not going to end soon.
Again, will he stop just at Ukraine, though?
What's that?
Will he stop just, let's say he succeeds in Ukraine, will he just stop there?
No.
I don't think it's a one and done.
Yeah, I mean, not this year he might, but no. This Crimea, well, it's not even, didn't even start with Crimea, right? It started with Georgia. Yeah, and then, you know, the regime toppling in Belarus, which there was some talk on some of the non-verified news sites that Belarus's army was preparing to invade the Ukraine from the other side to support Russia. I mean, I keep hearing the guy from The Hangover screaming, "What is going on?" You know what I'm talking about? I keep hearing that in my head.
I wish I could have that pop up on the screen right now. But then I get another copyright strike or copyright.
You been getting those?
No, have you seen the new intro?
No.
Go. What have you been doing? No, the new intro that was put together, I had to buy the music for it, you know.
Okay.
But every day now on both channels, the same company hits me with copyright strike and I have to contest it. So I went to YouTube today to say, okay, I can understand the first time. And then I show you my licenses and they keep removing them. But I'm like, what's the mechanism in place so I don't have to contest every video I post on multiple channels? You know, once I've shown that I own the rights to use the music. They're like, there is none. I said, so why should I stream on YouTube every day? Because you're making it difficult. They're like, well, we'll take that under advisement. So I reached out to the company that's putting up the strike. I'm like, I own this license. How do I stop you from? And they're like, you can't. You'll just have to contest every one of them. I'm like, come on. When you own something legally, sorry, that's a little side rant, but when you own something with the license, I now have to go, like if I put up 3 videos a day, I have to go and contest each one of them once they're copyright blocked.
You're better off not paying for it and just contest it every time.
But no, yeah, the only way I can win contesting it is if I show them my license. Otherwise, I would be in violation, and I'm not going to do. We do things legitimately. What is this? You baking a cake?
Cheesecake.
Cheesecake?
Yeah. Somebody put in there that I'm a baker. I didn't see.
You can only do that on the day that they're going to have factory orders. Sorry, that was a bad Cheesecake Factory joke.
Yes, it was.
Let's see. There's a wonderful article written in Time back in 2014 that highlights much of the history behind this and use of the denazification of the Ukraine as Putin's justification. Interesting. I'll have to look that up. Margin debt is at all-time highs, assuming that we see the margin calls en masse. What should we begin watching for to tell us heavy margin calls have begun?
Heavy selling.
Yeah, I mean that's all it is.
Okay, so margin calls generally, Sterling, they're hard to tell while they're going on. It's when everything is getting sold. Okay, gold is falling, silver's falling, stocks are falling, everything is getting sold.
Well, yeah, especially with stuff. That's why I think at some point, if we start getting some major selling pressure, you'll even see it in stuff that you're going to still want to own long term, like gold and silver, just because assets that have still made money or positions that people have that are up get sold to pay for the positions that are down.
Yep.
So that's why I never get surprised, when there'll be some day when I start seeing like gold and silver, even in still inflationary environment where stocks are dropping, there's still inflation running hot, and gold and silver are just getting slammed over a 1 to 2 day period. That's when you start saying, okay, stuff's getting liquidated, which I love, because then that's when you want to start looking for not across the board buys, but where you want to start looking for strategic buys. And that's where I'll tell people, that's where you got to keep powder dry. Like right now, the major plays, our uranium play hit the target today on a nice gap up and reversal. But then I'll look to still get in uranium again longer term. We're still in gold, but I'll look on pullbacks. Gold and silver are both buyable. Commodities on pullbacks, as I said, I was chatting with somebody today. They said, I should rush in and buy the commodity index, DBC or DBI. I said, not now, but there'll be some good pullbacks in it. Like grains aren't going to $20 tomorrow. There'll be pullbacks. They'll be, okay, everything's whatever. We're going to pull back
Mike Sterling's follow-up there about the heavily shorted stocks moving up at the same time. Not necessarily, but yes, you can see that as well, because it's all about raising money. So if people need margin call money and they have a lot of profits in heavily shorted stocks, they'll cash those out. But it's not like you're going to look at all the heavily shorted stocks and go, wow, these are all positive today when the entire market is collapsing. There won't be enough buying of heavily shorted stocks to prop those up when the whole market's going down.
And what's so funny, this just ties into a bigger thing, because the SEC's talking about new rules for them and everything else. Mm-hmm. And when the market goes down, everybody blames the shorts, but you should love the shorts when the market goes down, because that's what creates these nice little rallies. I mean, the most shorted. You look at this day last week. What day was hold on, this day, the 24th. You look at the most shorted stock index, it was up like 4% that day. I mean, there was a massive the rally was triggered, but there was a massive rally in the most shorted stocks, because it feeds on itself. So to blame the short sellers for the price going down is absolutely ridiculous. And the people that want to outlaw it, well, that actually makes the great bounces. You should love those shorts.
Yep.
People just don't know how stuff works, though. They just want to blame something all the time instead of researching something. So let's see. You can't trade. Yeah, you can't trade the US dollar ruble anymore. Yep. So where? Oh, you're gonna have to put up. We're gonna have to put up your cheesecake recipe for sale on the site, Bob.
That's Aunt Gail's cheesecake recipe. That's my my wife's aunt, and it's fantastic. And I would have to give her the money. So, yeah. We can do that, but I can't do it for nothing.
I didn't
love that woman.
I didn't say for nothing.
Okay, that's fine. That's fine.
Put that. Anything else?
It literally, that cheesecake will blow your mind. By the way, it's unbelievable.
Well, before we decide to put it up, you'll have to send me the recipe so I can sample it.
Oh, here we go.
Thoughts long term on Russian equities, the RSX.
That's going to suffer for a while, Sterling. I think. Yeah, I mean, you've got oil companies in the U.S. pulling out of partnerships with Rosneft and some of the others simply because of the aggression. I think people are going to be very hesitant to invest in Russia while Putin's in power. So you might want to take that off your list.
Yeah, because even
Something
if the
happens.
stuff with Ukraine dies down, what we just talked about a little bit ago, are you just going to rush in and say, okay, well, I'm going to trust that everything's fine if Putin's
Right.
still, sitting on the throne? No, I wouldn't be
Yeah.
putting, and companies like, British Petroleum was getting out of stuff and everything else, and they're going to take some big write offs, but they're not going to go, hey, well, I think all's okay. Now let me just rush back in with $20 billion.
A really good recent example is the shale pipe or the shale patch for drilling. As soon as it got to be hard to drill and crude oil futures went negative and et cetera, all of a sudden nobody wants to invest in that. And the shale patch just can't recover to what it was. We could use them now, but they can't get investors back in because of the losses suffered when crude oil went negative. This is a similar scenario to this.
Russia's next. Russia next. Iran.
Well, I mean, again, if you're Iran, are you gonna want to transact in crude oil and dollars? Watch it, So we're really close. Supposedly, we're really close to a new joint cooperation agreement, which is what the nuclear deal was called. Supposedly, we're really close to a new one, which would put Iranian barrels of oil back on the market legally. There's already Iranian barrels of oil illegally on the market. They go from unmarked tankers to marked tankers of a country that theoretically is exempt from the sanctions, and then to China. So of their possible 1.8 million barrels, supposedly about 1.3 are making it to market anyway. One of the reasons they want this deal is to get foreign investment in so they can get back up to that 2.3, 2.4 million barrels a day they're actually able to produce. But do you think they're going to want American dollars for that oil? I mean, initially they'll have to. When they see the actual crippling things that the West can do to a country that they deem. By the way, I'm not anti-West. It's just a fact, right? I try to think of what they're going to do. They're going to try and transact in any other currency they can. They're certainly not going to hold dollars because seeing this is crippling what they did to the central bank in Russia, at least short term. So, I think Christopher's right about the shift. The shift is very strange. I don't know what it means at this point.
What are your thoughts?
I got to jump on a call. So is there anything else you guys want to throw at me?
Well, I wanted to just get your quick take on the rally in stuff like the notes, the 10-year.
Is that what you have up now? This is what we talked about last week. We both thought this would happen, right?
Well, we had that doubles pattern that, it went to, there's reason it's not on here anymore. It went to complete targets. Now I'm still watching around 128.24. What was that?
It went to completion, huh?
Yes. And then I'm still watching this. I mean, we're up against the weekly rotation zone. So we've got from this oversold with divergences down here with that little double back to the weekly rotation zone. So now I'm going to see if it pushes higher, then I'm watching for the back to the possible 130s. But it's going to be interesting to see if this rolls down again with inflation not going.
Yeah. So what's really interesting is we talked about this when I was on last week, Tuesday. I said I thought the 10-year would get into the 170s in yield. Looks like it's going to get lower than that. Obviously, we were talking about this without this dramatic flight to safety being involved. So again, we're dealing with a wild card in this war. But I do think the trajectory for treasuries is higher yields, lower price for the longer term. I really do. So from that perspective, I think the war is too much of a wild card to say what's going to happen next. I mean, I'm not involved. I'm barely looking at it. But there is speculation now that this particular slowdown that might come from whatever the fallout from this war is going to do the Fed's job for it. And I don't agree with that. The yield curve is actually steepening now. It was flattening.
Mm-hmm.
It's steepening now, and that's because the short end is falling off a cliff, while the long end yields are falling as well, but not as quickly. So we've got what's called a bear steepener, and a bear steepener is not what we should be in. So I have to kind of like say that I don't have an opinion until we get some sort of clarity on whether this is a real war or just some sort of a point being made. If Putin's actually insane or actually has an exit strategy. If he doesn't have an exit strategy, then you got to look at treasuries going a lot higher and yields going a lot lower.
All right. Well, you said you have a call, so we'll let you go, and I'll just do a quick market recap of what I'm watching for. And then, are you going to be able to be on Thursday?
Yeah, I'll be on here on Thursday.
Okay, so there you have it. Thank you, everyone. So jot down your questions for Thursday when Bob will be back on. I'll let Bob go now, and I will stick around. Michael says thank you, so I will stick
Cheers,
around.
guys. Thanks.
We'll take a look at some other stuff. Hold on, let me reposition. Let me reposition myself. There we go. There we go. Small Mike is back. Small Mike. I'll let Bob know, Christoph. Again, it's great to have Bob on here. We don't go through just the technicals. We get to do some other discussion around stuff. So let me know if you find that helpful. I think it's a good mix-up because you guys can get sick of me. So what I was going off, let's go. We'll fine-tune this again tomorrow on the pre-market show. The pre-market, again, I might have to do it a little quick for the next few days. Now, this is really interesting because here's your shorter term price action in the S&P. See, I kept those targets on from that double, and we had this triple cluster area, push down reaction, finally pushed down to that 42.78 area target, and then a little bounce up. If we roll back down there, I'm watching really for a retest of the lows on the 27th. Because what's very interesting, now I love the bars like this, because we rotated out of the rotation zone. So this gives me a clear setup. Above the daily rotation zone, so 44.05 is roughly my line in the sand, and that's right at the 62.5% harmonic. We get above there, it's an easy, quick target for continued upward push. Now, is that long term? Probably not, but it's at least a short-term upward bias, so that can be traded again on short-term, very short-term. You can trade the SPYs, the Qs, the diamonds. You can trade the futures. I'll be watching this key area, which was just around today's low. We break down from that. I'm targeting this low area, especially the low area from February 28th, the end of the month low, and then we still have. This is part of the same side of this potential double, so we still have the double going lower. So this kind of setup, I have strategies for going either way. And longer term, I'm bearish, so I'm favoring the bearish side, but it has to prove itself. It really has to break down. And with all these whipsaw headlines and everything else, not holding heavily. So it's, again, get in and then use the targets to the downside. Nasdaq, again, can see coming up here, coming off the harmonics, really nice area right there. Nasdaq holding up a bit better, not able to get to the first targets here, but I am still going to use these lower. So tomorrow on a breakdown, I'm targeting, or overnight, 13,862. Then we get through there, 13,812. We get through there, I'm really going then off 13,683 longer term. To the upside, same difference. Today's high right at the rotation zone. We get through there. My next target is 14,406, 14,400 essentially. Then I'm looking at 14,500 essentially, then 14,600. And it just so happens those are the way the numbers worked out. Wasn't planned that way. Dow, you can also see Dow coming back a bit. But look at this. We had that little harmonic, significant level. The harmonics right in front of that target and getting this little mini sloppy double reverse. So it's actually a triple on the 15-minute. So I'm not really doing anything with it. If we do rally, though, I'm watching for return to 33,510, and then I'm keeping 33,734 to the downside. My next major target, I'm considering this one nearly hit. I'm keying off of 32,875, and then a return to the lows from the 25th of February. Let's see. So Wavy says, thank you. Abraham thinks we talk about food until the market decides the next direction. We could be talking about a food for a while then. I'd be up for eating some of that food too. Almost time for stock talk. Thank you. So, yeah, you know what? Let me wrap this up now, and we will go into stock talk, and I can continue anything there, but I wanted to get that over in case somebody can't get the market preview. That's your stuff for the indices. I would not get overly aggressive with crude. If you're already positioned, I'd trail a stop. If you aren't already positioned, I would not chase at this point. And yes, I agree. The market's going to be very volatile for a while, especially since we've triggered long-term sell system signals. It's generally, when you have long-term sell signals triggered, it's generally volatile, whether there's a war, whether there's the FOMC. It's just volatile because everything's, again, trying to find that dip and trying to not miss out, and then it rolls over and people get steamrolled. Going to have to watch the recorded version. Thanks as always. Great, Dave. I will talk to everyone looking for short-term timing patterns in crude. Yes, I am. I just don't have one yet. Let me wrap this up for now. By the way, if you're new here, please do consider subscribing, ringing that bell, and hitting that like button. Longer-term members, hit the like button and leave some comments. And with that, I will talk to everyone later. Bye for now.